morning, warriors. Good morning. Turnaround Tuesday. The S&Ps are having a very strong day. They're only down 19. They were down 60 last night. So trying to recover. Maybe we get an ABC here. We've retraced more than 23% of the move from the new year, but we're lower on the year. And we held the 200-day. So this is going to be very critical, maybe not just for today, but going forward. The 200-day is kind of like Custer's last stand here. If we take that out, Houston, we have a problem. But when you think about it, guys, the world has not ended. Numbers have changed. Perhaps some numbers have changed in millions of people's accounts, but we're still here. And now I say, as I teach, next. So let's take a look at a few things before I hand it over to Blake. Euro pound continues to perform. And as I said, it's more about cable weakness than euro strength, because the euro's dogging it too. But actually, with what's happened in the market, I'm not impressed with the dollar's performance here. And I think if the market's going to recover, it could use a tailwind, like another decline in the dollar. So we're right back in this channel line from the weekly wedge line. So that's going to be pretty important today to see how, if it can follow through here. Being turnaround Tuesday, I'd be tempted to trade it, but with the carnage going on in the market, I'm going to be completely frank with you guys. I'm afraid to do much, okay? When this type of market carnage is happening, if you're on it, fine. Actually, I covered my bearish Russell position real early when the S&Ps were 2,700. So, you know, like usual, I didn't ride to my target, but I'm grateful for a profit. I'm sure a lot of people were severely damaged yesterday. So we'll see what happens with the dollar. Normally, I'd say, you know, this is pretty bullish. We broke this wedge line, and technicians would say we had a throw under, and now we're getting back inside this channel. But I can't chase the pound after a 500 pip break, and I don't want to short the strength either. So it's a nothing trade. And I was thinking about this as well. Crude's still lower. I think crude's going to, I'm kind of in Peter Temple's camp, 58.48. And again, on the S&Ps, if Peter's right, this should be it. You know, he's talking about 10%. I think maybe we had 11 from the high. And, you know, he talked about when he was here with us last week, a move to 3,200 and then another correction. But, you know, I never talk about crypto. But I was thinking about it because I heard a few people talk about it. In fact, our speaker talked about it yesterday, Peter Atwater. The Bitcoin and the other cryptos turned down first before the big break in the market. Maybe it being a sign of excessive speculation. People are being rewarded buying air, literally, you know, crypto, digital, it's air, can't put it in your hand. And that if that's the case, and that the market isn't going to, we're not going to have a market crash in the beginning of a bear market, which, you know, I'm open to it still happening. But short term, if we're going to get a bounce, that we should get a turn in some of these cryptocurrencies. And we are diverging on some of the shorter time frames. And like on the 1 hour in Bitcoin, this new low we had here was over 30. Looks like it's coming out of here. Well overdue for a bounce. It's daily, you know. I bet if you did a retracement from here, you're looking at 78.6 here. I thought that that Ethereum had a better structure. You know, some Elliott guys, and I'm not an Elliott guy, would call this a ABC or a 3. We're in the middle of 3. So looks like they could turn. And then the other one, Litecoin, actually has some divergences as well. Let's see if it took out the low. No, never took out the low, but has a need to take out this low, which it never did. Maybe it's not going to. But the best structure that I've seen is in Ethereum because of the way the daily looks, and you're starting to get non-confirmations down here. Everyone with me on what I've covered today? Oh, I said Peter Temple. Okay. How about Peter Piper? Anyone follow the analysis of Peter Piper? I bet Blake doesn't even know who Peter Piper is. I'm going to hand it off to Blake Morrill.
Aside from the pizza, no.
Okay.
We have a Peter Piper pizza.
Oh, okay. I think there's a nursery rhyme about Peter Piper.
I think that Peter Piper pecked a pepper, something like that.
Anyway, so Peter Piper is still looking for 3,200 in the S&P.
So Dale, we've had obviously a really big dramatic.
Yeah.
So what do you make of all this now that we're down here? I'm uploading a chart for ForexAnalytix.
Okay. You know what, Blake? Now that I don't have a short position, what do most people hope for? A recovery.
Right.
You know, like I said, the 200-day held. I think it's Custer's last stand. If we get through last night's lows, man, there's a problem, Blake. And it's not just an event. It might be a bigger signal. Maybe, everyone got bullish economy right when it was folding. But the daily right here is so critical, I think, right here. And perhaps we get a reversal day. I'd like to see at least a failing rally to attempt shorts, and that would, for me, be around 27.20. So I mean, that's 130 pips. But when the market gets like this, Blake, and I covered my shorts when we were about 2,700, because up here it sounded like an outrageous call, 2,700.
Yeah.
So I didn't expect. So I went, me, I get up at 3:30, and after our session, sometimes I'll go lay down, and the old man will, put a hot water bottle in, and, my aching feet, and just, put my shawl on and take a nap. And then a buddy of mine called me, goes, Donald Trump says America is open for business. And then he goes, they're really killing it. So, I would just stand aside and await the next opportunity. I certainly don't have the courage to get long, but I do think there is a new correlation, which I don't understand. Crypto kind of led this. So, and a lot of the crypto pairs look like they're ready for bounces. So that's what I'm thinking here, is a bounce in the S&P, a bounce in crypto. That maybe they could turn the dollar and take it down one more time, although, it looks pretty good. But EG was, the right way to go long. But, I can't get short the pound down here, and I don't want to short the strength, which has been the euro.
Yeah,
So,
I think from an FX point of view, I'm really hoping the dollar pulls back a little bit. I let go of some dollar longs that I had overnight, and I actually tried to get short the dollar. I tried to buy the pound at 139, and I took a 35 pips hit on that really quick. The pound just continued lower. The pound
EG very quietly is acting great, like it wants to take out every last bear. I started noticing that last week. I'd be interested in what your view is on EG, because I know that even when you're not trading it, you're watching it.
Yeah,
So
well, I am, and here I'll show you what I've got with the euro pound. And the euro pound, if you look at,
see, you got a breakout.
I do. It's a same triangle breakout that we had before. So let me grab a pen. Let me make sure that you guys can see that. Okay, so you can
if we repeat what we did from the last breakout, we'll have a third drive up there around 94. If the break, yeah,
it's entirely possible, and the pound looks really weak. So I wouldn't doubt, you know, if we get, you know, a break higher in the euro pound. The euro has been, you know, obviously it's down today, but the euro demand on the crosses has been very, very strong as of late.
Real resilient during the carnage, don't you think?
Very much so. So you know, I wouldn't be surprised if the euro pound, you know, at least, you know, makes its way back up towards 90, if not, you know, 90 pence, if not higher. But I think it looks, you know, pretty good, pretty constructive. Stan, who's in our chat room, he was looking at it as a possible short on this trend line, something like this. I'm just, you know, roughly drawing it, but you know, which could stop it. But again, you know, you look at the previous moves here, and it looks like, you know, we could break higher. Now the pound, I'll tell you why I was trying to buy the pound is we had this, well, at the time it looked like an AB equals CD or an equal leg move. And what I was thinking we might do is we might do something that looks like, let me grab I've got the magnet on. I was thinking that we would do something like this, with an equal leg.
Candle happened quick, Blake, like at a blink of an eye.
It was fast. Yeah, I mean, I picked it up like right here at 139, and then it just dropped, you know, a quick 30 pips, and I said, screw this, I don't want to be.
I think it's market conditions now. There's going to be air pockets, and that's what makes me, you know, a little jumpy about being aggressive in the market. That there's, you know, it's like you have an earthquake, and maybe the earthquake stops, but you have all these aftershocks that happen afterwards.
Yes, there are a lot. It's a very fast-moving market, and so let me give you guys a little piece of advice. In a fast-moving market, you better be trading smaller size than you normally do, because things can happen really quickly. And I was telling the guys and gals in the chat room, you know, with the pound, I always trade a little bit smaller anyway. I've actually toned down my my lot size. I had a pretty big position, short Aussie dollar and short Kiwi dollar overnight, and made some money in the Aussie. Basically flatted the Kiwi. I mean, took a little bit out, and then and they were big positions. But now that we've seen all this volatility, all my position sizes have just shrunk dramatically. Because look, you have this S&P, this move. By the way, if you guys didn't catch why we stopped where we stopped, let me just show you. This was 161% extension of the January move. Basically, this is the end of December. Yeah, this is 161% extension. So if you don't know why we stopped where we stopped, that's why we stopped where we stopped. Now,
that's very valuable to learn, guys, if you're watching this, because you know what? Most of the measured moves I take are not on, you know, converse moves. He's doing it based upon an uptrend to give himself a downside target. Not many people teach that, Blake.
Well, there's a couple of things here. So we hit not only 161% extension. Let me clean up this chart a little bit, because, you know,
I learned something new from you today.
Oh, good. I'm glad. That's great. But for this,
we're growing or dying, buddy.
Okay, so you know, Dale, you always talk about the throw over, right?
Yeah.
So that's what we got right now, right? We've got the throw over. We have the let's
throw over.
Yeah. Let's go to the weekly chart so you can see. we went up through the channel resistance, and now we've reversed. That's not good. Okay, now what we've done is we stopped at the previous here. Let me take this line. Let's make it really thick, and let's make this channel right here really thick so you guys can kind of see. We basically stopped at the 200-day moving average, channel support, and 161% extension. If the S&P is going to bounce, it's going to bounce from here. If we break the lows and close below the overnight lows, this market, for the lack of better terms, is screwed. Period. End of story. So let me make sure I revisit all this so you guys can understand exactly where I'm coming from. All right, let's talk about this once again, because I want to be very clear. Is everybody seeing what I'm discussing right now? Okay, 161% extension, right, of this move. This is all of January. Okay, we're obviously down for the year. 161% extension. We've stopped. Okay. We also hit channel support, previous channel support on this throwover. Okay. We also hit the 200 daily moving average, the 200 DMA. If we break that low from overnight, this market is, and I'm not talking about an intraday break. Yeah, I mean, we could literally be trading down here at this the bottom of this channel, which is like 2,300. Yeah. And it came fast and furious. And there's an old saying in the markets, up on an elevator, down on an escalator. We were going up on a nice little, elevator. We came down on that escalator really fast. All right, this is extremely scary. And if you're long equities, hold on really fast. I got to see something. Ozzy's getting killed.
It's kind of like a wily coyote standing on the cliff last week.
Yeah, I mean,
then the road runner, he's after it, and then the cliff gives way.
Right.
Wily coyote top.
It's very, very dangerous. And what I'm hoping for, personally, is I'm hoping that the market can recover back to this area. Okay. Over the course of the next couple of days. That would be a nice, give the market a little bit of breathing room, give some people a chance to kind of recalibrate a little bit. I do personally feel that a top has been put in, and you guys should know that. I mean, if you watch the last 2 weeks of the week ahead video, we did the measured move, the AB equals CD. We completed it to the pip and reverse. So I believe the top is in for now. But I do believe that we came off really fast, and so hopefully we get a couple of days of a bounce. Let people, like I said, recalibrate, and then I think we start backtracking from here. Is the S&P going down to 1,500? Probably not. Is the S&P going to travel back down towards 2,200, 2,400? Maybe down to this congestion area down here around 2,000. Yeah, that seems very logical to me. And I know if you go, oh my God, if we go from 2,900 in the S&P to 2,000, what decline is that? I mean, that's a 30% decline, I think, if I'm not mistaken. Yeah, it's to 2,000 is about a 30% decline. And if you would have asked anybody a week ago, they would have said it's not even possible. A 30% decline in the stock market is, we'll be in a bear market. We're not going to be in a bear market. I mean, by definition, that would be a bear market, but really is what it would end up being is more just a consolidation of these gains. If we drop down to 2,000 in the S&P, I mean, it would be a pretty severe pullback, but we'd probably consolidate, catch our breath, that type of thing. what I'd like to see in the stock market is I'd like to see us bounce for a few days. You know, this is a turnaround Tuesday, so if there's a chance for a bounce in risk appetite, you know, this is probably it. You know, this is probably where we get it. You know, good news is you look at the US dollar, Japanese yen, we're getting a pretty big bounce here. You know, so the other yen pairs, euro yen hit support, channel support, bounced off of it. Pound yen, well, pound yen doesn't look too good. Pound doesn't look good in general. The Aussie yen finding some support after flushing out. And by the way, our pip got closed last night early, but it got closed in for the Aussie yen pattern in play. We got hit at the 86 level, and we obviously dropped below that. I figured we were going to trendline support here. That's why the target was there, but you know, we obviously flushed below that. But you know, Kiwi yen still holding up relatively well. You know, Canadian yen, we were below the 200-day moving average, stabbed below this support. I mean, look at this. The support here. I mean, we took out support, we took out all these stops, and then we've already bounced back. You know, there's a lot of reasons why, in my opinion, we could see a little bit of a bounce here. And do I think that the stock market's done going down? No, I don't. I actually think it's going to continue to go down. I just think that, you know, over the next 24, 48 hours, we might get a decent bounce in the stock market. So, and you got to be prepared for that. So, you know, what would I be doing in the currency market? It's pretty simple. You know, we had this great move out of a you know, descending wedge in the US dollar Canadian. We're almost at a 50% retracement, hitting some resistance. I like to see this sucker pull back to 124, 124.50. You know, I'd be a buyer down there. I'd love for this to happen. You know, I'd love for, you know, this to happen over the next 2 days and be a buyer somewhere down here. Let's go over to the Aussie. You know, Aussie's, you know, just taking it in the keister the last couple of days. Great. I'd love to see it bounce back to 79.50. I'd love to see some of these areas get tested up here, you know, something like this, you know, somewhere up here, and be a seller up there. I'd love to see that. You know, and I don't know if we're going to get it. You know, I always try to plot out what I think is going to happen in my head. But, you know, it doesn't mean it's going to happen that way. You know, you got the Kiwi dollar. The Kiwis has a double top. I actually closed our pattern and play out because it's really outperforming because the Aussie New Zealand's getting crushed. So the Kiwis actually looking much better, you know, and if the stock market bounces, the stupid, you know, New Zealand dollar is going to be trading back at, you know, 73 1/4. If the stock market really does, you know, give us some sort of bounce, we might actually, you know, bounce up here. So you got to be prepared for that. Again, I don't know if the stock market's going to bounce. If you think about what we've done over the last several years, you know, if you look at, you know, just the massive rally from 2009, do I think that the top is in for now and we're going to be bouncing around? Yeah. Do I think we're going down to, you know, way down here? Probably not, but it is a risk. It is a risk. I mean, you know, we got rates going higher. We've got, you know, we're probably the tail end of a business cycle that's going to slow down. You know, I'm assuming earnings are going to start to get a little weaker from here, and it's all going to weigh on the stock market over time. So, you know, that's why I think that, you know, being long, even risk at this point in time, is very scary. You know, a lot of wealth managers are probably looking to peel back some of these recent you know, gains in the stock market. So they'll be using these opportunities for a bounce as opportunities to sell into strength. And I think that's probably what we're going to see here in the S&P. And I want to turn your attention. Last thing is I want to turn you over to the dollar index. And the reason why I want to talk about the dollar index is because I think the dollar index has put in a near-term low, but what really is going to get me believing that is if the dollar index can get back above 91. Remember, 91 was a breakdown point. It's right here. Okay, 91 is right here. We're already coming up to this previous trend line, but if we get above 91, we could really start to squeeze higher, and I think that's possible with the dollar. I think the dollar is starting to catch that safe haven bid. But think about that. If the stock market pulls back from here, or bounces from here, the dollar could stay a little offered. We're going to need a fresh leg lower in stocks to get the dollar index moving higher. There's not a lot of reasons, in my opinion, to be long the dollar, but if there is one out there that could really move the market, it's risk aversion. The market continues to be risk averse. Investors, their attitude is, look, put me back into cash. I just want to be back into cash. And cash for most investors means the reserve currency, which is the US dollar. It's not, put me back in cash, put me in Kiwi dollars. No, it's going to be put me back in US dollars. So the dollar is kind of tricky right now. I think the dollar is going to be bought on dips, just like the stock market's going to be sold on rallies. And so that's what I'm hoping to see is the stock market rally for the next couple of days and turn green, get everybody feeling okay about the market before it turns lower again, and then
Yep.
As a result, the dollar is going to be probably come off a little bit. Then we want to buy dips.
A little history lesson, Blake. In 29, there was on the first leg down in the market, there was a 3% day, which we exceeded yesterday, and that was called, there was some famous analysts, Babson, called the Babson break, and that 3% number was a signal of the beginning of a bear market. After the Babson break, we did get corrective, overlapping type of recovery for a while, and then wave 3 started. So just a little history lesson. We even had a 3% break or better in this market. I don't even think in August of 2015, when the Dow was down 1,000 points, because it didn't stay there. I think it's the first time maybe throughout this whole bull market.
Wow, that's crazy. That's a crazy statistic.
Yeah.
All right, guys. Well, hey, I got to get ready for my trading day. Steve, are you here?
Hey, Blake. I wouldn't miss it for the world.
Hey, my friend. Don't be too thirsty.
Yeah, really. Well, Steve, I hope you fared well in this equity market collapse. And
he's like Jesse Livermore. What are you talking about?
I have zero complaints. I can tell you that much.
All right, good. All right, guys.
I'm sure the same applies to you.
Yeah, it's been a good few days for me. The volatility, when you have VIX above 50, which by the way we are at. VIX is at 49.2, which is probably a good short today. And I don't trade volatility, but I would say if you're going to sell it, it's probably this is going to be it. But we were talking about that in the Stelios was talking about that too, and I happen to agree with that. If we're going to get
a couple of things, Blake, with what you mentioned. First of all, I agree 100% with everything you said. I also believe that chances of a rebound today are quite high, etc. You've seen in how many days the S&P's RSI has gone from 96 to, what was it yesterday? 18, I think.
Oh, no, the DSI, yes, the DSI.
The DSI, yes.
Yeah, Daily Sentiment Index, yes.
Yeah, and VIX's daily RSI at the moment is at 94. After being in a period that we were hitting like 8 figures and 9 figures, just suddenly at 94.
Yeah,
and that tells you how brutal. And we have been saying over and over again here that people should be careful. The downside risks are great, and a move to the downside is going to be brutal. And I think this was exactly the case, right?
Right.
I remember when you were showing the wedge in the VIX, Steve, and I said, wow, it looks like it could do, you know, wherever you had it anchored, 25, 30, 35. I said, well, I think it could go there. And, you know, that was an outrageous statement then.
Yeah.
Week, you know, so wow.
All right, guys, I've got to get going.
Good luck, Pinkert.
Thanks, guys.
In a New York minute, everything can change.
Yep. And in essence, I'm not going to say much more about the stock indices. We can have a brief look at others because Blake focused mostly on the SPX, and for a good reason, because the SPX is considered the global risk barometer. So, you know, there is a very good reason why we always have a look first at the SPX. That's exactly what I also wrote in the chat room some time ago, that the 200 EMA is going to be critical. If you zoom out, you can see how many times it has acted as support, and we've spent like, with the exception of a couple of days, we've spent like since the first few months of 2016, every single day we've been above it, with just a couple of exceptions like intraday moves or like 2 separate days that we closed below it, something like that. And as you see, we said plenty of times that, you know, the move higher is completely unsustainable, and this is usually what happens. And as you see, you don't even need every time like a very, very specific catalyst. One day the market wakes up to a reality, then you got the various financial products, in this case products that are you know, that are based on the VIX, exacerbating the movement. That's it. Now what happens from here? As we said, if we break below there, things become very ominous and very, very dangerous. Now let's have a brief look at the Dow Jones. As you see, the Dow found support yesterday in this ascending channel resistance. So we need to see if it's gonna, this is yesterday's candle, by the way. We need to see if it can defend this level today. This is the Nasdaq. As you see, it's trying to also defend this broken trend line as support. We've already retraced the whole ascending wedge move that we've had. This is the German DAX, which is rebounding from an important support level after breaking, very decisively below this expanding triangle. So this was an area that we had already marked as area of support. It's reacting to it today. Obviously, as I said yesterday, some euro weakness is also going to help in that direction. FTSE is also defending quite an important level. As you see, it was resistance. After we broke above it, it acted twice as support. This is the third time it's acting as support here. Pound weakness obviously can help. Regardless, as you see, after such a move lower, you need to be looking for resistances to sell, right? So now areas that we were looking for support, and the index managed to slice through them like butter, like knife does in butter, have a very good chance of acting as a resistance from this point on. So I would say that 7,290 roughly might prove like a hard resistance to crack. Above it, it's 7,430. If we believe that this is going to be at least some short-term bottom, we can also draw some fibs here. And also monitor, for example, this area that we said coincides with a 50% fib. So as I said, I think that after such moves lower, even if we say that we haven't found some major highs, we haven't formed some major tops, I can tell you two things for sure. One, the market is not going to recover in 3 days and go near the highs. As you can understand, this kind of an experience, because don't forget there are a lot of people that are trading out there, and even many funds, etc., that have never, they don't even remember what a bear market is, right? So when you wake up every day and you just go along the market and everything is moving fine and you're getting like some type of childish corrections, and suddenly you start seeing consecutive moves lower like this, then you know, you get really scared, which means that, first of all, as Blake said, there are a lot of people out there more long exposure they have, and that on its own will make, after such a move, the recovery to new highs, even if we assume that that will happen, a slow process, because it's going to take time for people to start believing again that, you know, we might push from here to new highs at some point, and initially rallies are going to be sold. So keep that in mind, and really you cannot expect that as within a week we literally retraced how many days of price action. Let's take the lows. These are 120 days in a year, or 83 trading days if you want to take it in trading days, and we retraced that within a week, right? But we said many times that markets, when they are extremely complacent and have completely stopped ignoring fear, fundamentals, etc., that's what tend to happen to them. One day they just, you know, plunge and never look back. So we retraced within a week like 120 days of price action, and in this specific case, it's like we're almost 14% lower, right? And the vast majority of these 14%, I'm taking the lows of today so far, happened within 3 single days, right? Because the previous 2 were just spinning tops. The market basically did absolutely nothing. And the previous 2 to that were just, you know, okay, regular down days, let's say. So within literally 3 days, we've undone a few months of melt up. And we went from like all-time highs in relative strength indexes, etc., to oversold levels. Anyhow, a rebound today is quite likely. I'm pretty sure that there are a lot of institutions, central banks, etc., that will try to defend the market from not running even wilder than it is at the moment. I have no doubt that they can temporarily put some kind of a break here. Now, what happens from there is a big conversation, and it will depend on, you know, on several factors. Now, I'm still short the Aussie. I'm looking for 77.40. I think this looks good, and it might even resume some bearish trend from here. Why not? But 77.40 is what I'm looking for. I think that 79 is going to be resistance from this point on. I know that Blake said he's looking for 79.50. Of course, that can happen. We can rebound up to there. We can even rebound up to 79.85 or something. But I do think that even if we see some kind of a rebound from here, there should be at least one more leg lower following. Blake already mentioned that Kiwi is holding much better, and that's mostly due to the cross-currency effect of the Aussie Kiwi. And I totally agree with that, because keep in mind that 2 things I want to show you here with Aussie Kiwi, because Blake didn't, he just mentioned it, and he did very well, but he didn't specifically mention what is in play here. First of all, we managed to finally break below this zone that we had tested several times, the 1082, 1085 zone. This was resistance, then it started acting as support. This zone was also hosting the 200 daily moving average. So at the same time, we broke below there. Also keep in mind that it's not pretty, but this is also a head and shoulders formation, right? There you go. And that was the neckline. Meaning that if you want to be long one of the on one of these commodity currencies, you'd rather be long the Kiwi, and if you want to be short one of them, you'd rather be short the Aussie. Because obviously, especially if we take the head and shoulders formation targets, we're talking about levels that are a lot lower. I'm guessing by the eye it's at least somewhere there, okay, at the next support zone that I've marked. And you know, I think this is something you should not ignore. Okay, let's have a look at the USD. Let's have a look at a few other commodity currencies. If you remember, I prepared you and I told you in advance that I do see a period that commodity currencies are going to underperform. Obviously, with this risk aversion coming through, you can easily understand why. We had also warned here that the USD CAD is not kidding, and a break above there should bring it quite fast to 126.60. I think nothing has changed with that. USD NOK with a little bit of a delay is following suit and is actually currently testing resistance. I had said that a break above this descending channel should get us back to 785. If we do break above 785, we should get ourselves back to 8. Okay, so one scenario is we get rejected from there, but if especially risk aversion persists, you know, the next area to be looking for is 8. And as I've said plenty of times since before we actually found the low at the DXY, once the DXY starts squeezing people out and the first area comes here at 911, we're almost there, and the next one, and most importantly, comes at 91, then you know, we can have a cascade move, and you know, wrong-footed positioning can really accelerate a rebound much more than you could initially you know, expect. And that's one lesson that the market has taught me several times, that even when you see let's say like a very clear move and you see very clear technical levels to find, for example, resistance or support, depends on if it's moving higher or lower. Sometimes when the market starts getting squeezed, you overcome several areas of interest much easier than you would have initially thought. And that's something I always keep in the back of my mind, you know, not to jump the gun too fast when conditions tell you that there is danger ahead. And such conditions are, as I said, extreme positioning, extreme sentiment. Usually these two might even go together, but not always. There are occasions that you find extreme sentiment, but positioning is not still extreme. But when you do get a combination of the two, it's like, you know, it's like the fuel you need and only a spark is missing, right? And we might be seeing this spark happening here, and this can actually manifest moves that are going to last much longer than we initially expect. Okay, that's why I'm telling you that you should really be careful. And as Blake said, especially if we get a complete collapse in risk appetite, and we told you what the signal will be here, then things can get very, very wild, very, very fast. Okay, and definitely, and I said that several days ago, the currencies that should strengthen under such conditions are the dollar, because whenever you want to go in cash, very often that means dollars. The Swiss franc, simply because it's, you know, it's one of the bigger beneficiaries of safe haven flows, and the Japanese yen. And that is also a reason, because I remember a friend here asking, why should the USD yen keep moving lower if we get some kind of risk aversion, since it has been moving oppositely? And I told him then that, yes, you're right, correlation has inversed momentarily, but once the market goes in true risk aversion, then yen is going to find again its you know, long-held status as a safe haven currency. And you can see that here because, for example, the US dollar has been rebounding, and the USD yen has found resistance in the first resistance area at 110.15 and hasn't managed to break above it. And actually, I think it looks quite bearish to me here, unless risk manages to recover, like, you know, strongly. I really believe that the head and shoulders target, which comes down at 107.30, which is also that low that we had there, is a very easily achievable target. Okay, only a daily close above 110.15 can stabilize it somewhat. Okay, so on the other hand, we have gold. it's not yet receiving safe haven flows. As you see, it's actually dripping lower. But I do think that if things become, quite tougher in the markets, gold is going to catch a bid as well. At the moment, gold does not seem to care, I think, because at the moment, still people are not considering that there are real dangers for the financial system, and there aren't for the time being. Let me be specific here. But if the situation worsens the next few days, and true risk aversion starts coming through that can have implications with the economy in general, etc., then you should expect gold to get bid. That's why I didn't choose gold to be short at, but on Friday, I went short. I don't remember if I said it yesterday, but I definitely wrote it several times in the chat room. I went short near the end of the day, palladium. Why? Because palladium is a clearly defined metal that that moves according to how the economy does, and risk aversion does affect it. It has a straight-on correlation. And when we got that 2-day rebound on Friday, I shorted it just above 1040. I think my entry was 1042.5, 1042.70, something like that. So today I took profits on half of my position for 2.2%, and I'm looking for the 1,000 level to be tagged. I'm not sure if I'm going to take the rest of the profits at 1,000. Depends on how fast and what kind of a momentum we have on the way lower. I might hold for more. Anyhow, the rest of my position is now on break even, and I do think that palladium, which is a metal that has also recovered greatly, and as you see, it has had a huge bull run since the very beginning of 2016, and prior to that, it had another huge bull run. I think that it has the potential of getting a much deeper corrective move lower. I mean, 900, for example, 905. If you zoom out, seems to be like a very, very attainable target, but it's like more than $100 lower, right? I also do see a 5-wave move here, so I do think that even if I take the rest of my profits at 1,000, I'm definitely going to be looking for opportunities to be short once again. So, for example, at another test of this broken channel, I think that even if I close the rest of my position, I'm going to give it a second try to be once again short and try to make for a second time money on the downside. Okay.
Waves to the downside in the S&P, Steve. I know Blake covered the S&P, but I was wondering if it looks impulsive. Was it a 5-wave impulsive wave?
Listen, this kind of move, yeah, it looks very impulsive. But of course, keep in mind that even if in corrective waves, you get impulses, right? So people have to be, so people have to be able to.
On shorter term time frames, was it a 5?
But I can tell you, we can go ahead and look. Actually, we can even look. Yeah, it looks like that this might be a 4, but something. Let's give a freebie to people, and let's go ahead and see what Gregor thinks about it, huh?
Yeah. Greg
is going to be with us within the week for sure, so you can ask him questions. But let's go and see what Greg is thinking. So let's go to Gregor's analysis here. And yes, as I told you, this is a 4. It looks like a 4. There you go.
It went deeper than, he revised it now. Okay.
Yeah, you see. And if you see, and that's exactly what I was talking about, such a move, which in the short term is impulsive, cannot just get erased, reverse, and go to new highs. So at the moment, the basic market psychology, which is what people are going to be looking.
This is still corrective to him. I think.
Yes, it is. It is
2,400.
It is, but keep in mind that at any decent rebound that we get, people will be looking to offload long positions, and that should create, because keep in mind that Elliott wave is a form of technical analysis that works very well because it's based on how human psychology oscillates according to price, right?
DNA. DNA.
Exactly, and that's one thing that we haven't managed to actually affect, right? So I do believe that no matter how strong of a recovery we see initially, I also believe that the market is definitely going to print. Let's say that today we find a low, okay, which is a good possibility. Let's say that the overnight low was a low, or anyhow that we form a new low like today or tomorrow. Let's say that we go there. Okay, so let's say that we go here. Let me go back to daily. So let's say that we rebounded. Okay, let me leave it at 4-hour chart so you can see the rebound. So this is a 4-hour chart. So let's say we moved higher, we print one more low, and then we find a low there, which is also, you know, horizontal support, and then we do like a strong rebound within some days, and we get ourselves all the way back there. Okay. So what do you think people are going to be doing there? They're going to be offloading positions, being relieved that they got the ability to get out at better levels, right? And that should create something like that. Before the market stabilizes, VIX stabilizes, and people start feeling more comfortable, and, you know, there's going to be, again, articles, etc., explaining to people that, okay, it's okay, it was just an exaggerated reaction due to XIV and VIX, etc., 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 and people will start, you know, slowly feeling comfortable again in building risk-on positions. We might have seen some good numbers from the economy still, so that's going to help with the jitters. But this is a process. This market cannot and will not recover to the highs within like a week, like it plans from the highs to hit within a week. I can put my signature on that statement, you know what I mean? So, which means that the way to recover to the highs, even if this is just like a wave 4, as Greg expects, let's see if he also has a weekly view. Yeah, there is a weekly view. So even if this is a wave 4 and we have one more high coming, this is not going to be like a 10-day, 15-day, 20-day, 1-month process. It's going to be a slow process. And keep something in mind. And I said it like several days ago. You have a very good memory and you remember it, Dale. In my opinion, volatility is here to stay, and this is the last phase of this bull market, and this is the last phase of this business cycle. And even if we push to new highs, which I'm telling you, yeah, there is a good possibility. I think that the market environment that, in quotes, we enjoyed from the lows that we had here, right, to all the way and to the euphoria phase that we had until a few days ago, are not coming back. And that's good for us as traders, right? I mean, volatility is good. Volatility is good. As Blake said, you might need to adjust the size of your positions, but volatility is good. And you know something else, from a technical perspective, I'm going to tell you something. Volatility helps technical patterns become more reliable. You don't have nice and reliable technical patterns when volatility is down to 0. But when you do get volatility, you get good technical patterns and reliable technical patterns, which you can use to trade on. Thank you, Jason. Thank you. Amazing how quick things can change. A few days ago, it felt like this market would never drop. Kudos to Face for warning everyone. Thank you, mate. I mean, yeah, we really felt like it. I mean, we were even discussing between us, and you know, we knew that these kind of moves are completely unsustainable. You can never exactly time it, but we knew that they're unsustainable and that people are going to get trapped. When you see headlines that record retail investors are piling in the market, and you see this kind of a euphoria, this kind of readings that are like all-time highs, etc., and you know that fundamentally, you know, things do not justify these kind of valuations, etc. You know that sooner or later, you know, there's going to be a catalyst, or just, you know, a simple mishap or whatever that's going to trigger such a move and such a thing. Blake, be careful. Gatman is very bearish stocks. Hodl and buy more, says Dave. Yeah, we had the discussion in the chat room yesterday. What's my take on crude oil? Yeah, that's a good question. And since crude is also correlated with a lot of stuff, I can tell you one thing for sure. I said it several days ago as well. Crude is currently testing support. I did believe that there is a very high chance that after the push to new highs, we had found a high actually. As you saw, that's what I had drawn. But I think that today might even confirm that because we're currently sitting on horizontal support. If we actually drop below there, I really don't see any real support until 58.80. And I do think that the chances that crude is going to correct lower from here are very, very, very high. If you remember, we were not warning about that since we hit our ultimate target, which was 63. Obviously, a bullish market can always overshoot the targets, and it did so for $3 in this case, $3.50. But I remain in the short-term bearish crude. I do think that crude can easily correct even $10 from the highs, and that won't even disturb the bullish trend in general. Okay, this is also one more market. If you remember, I explicitly talked about crude last week, and I said, listen, be extremely careful. There are 12 long positions for every single short one. Sentiment, positioning, everything was also extreme in crude. Everybody, Goldman Sachs was revising their targets at $80 as they were revising their targets at, if I remember, when we were at 26, they were like revising their targets for 20 or whatever else. You know, I was seeing here all this. Bloomberg was coming out with headlines and titles saying that, you know, crude has never been as bullish as that, etc., etc. Everything was there. Everything was there for a top in crude. Of course, it hasn't been confirmed yet, but you know, I still stand to that opinion. Copper, absolutely. Copper is still looking good, as you see. Copper is still looking good. I mean, I see nothing that isn't corrective in this pattern, right? I know that copper is considered the risk barometer and it's a risk on metal usually, etc., etc. I don't care. I mean, I don't care in what sense. I'm first going to review this chart as a standalone chart, and I can tell you something. Price action, for the time being from the highs, has nothing impulsive to the downside. End of story. So one way or another, I don't know how and why, since we were seeing, you know, strong risk aversion coming through the markets, but copper looks good. Copper still looks good. What's my take on euro pound? I have absolutely no take in the euro pound, and there is one good reason I don't. This is the exact same reason that has helped me avoid getting chopped up here, because what I see in the euro pound was a 5-wave move lower, and since that, just a choppy, slightly descending channel that has produced on occasion like several days of what seemed to be like fast price action that was always reversing, and we kept on staying in this channel. So yeah, I do see that this is the 4th day that the pair is moving higher, and the move seems quite strong. But unless we manage to actually break above this channel or below that channel at some point, finally, you know, I find no reason why I should be involved with it. Bill, I think part of why the cable lost its appeal so fast, as you mentioned, is the fact that it was also overbought. DSI for cable, the daily sentiment index, had surpassed 90, which is something you see very rarely with Forex currencies. And I think the market was, once again in this one, very wrong-footed. By the way, that doesn't mean that it's bearish, simply because in essence, to even begin discussing about any technical levels of seriousness being broken, we have to come all the way down to 136 and change, and then break below it, because if, as you see here, this is the first serious area of support, right? So yes, cable is definitely weaker, but I don't think you should be turning bearish too soon, too fast, because we don't have any confirmation there. More or less the same applies with euro, but I have to reiterate here that I remind you that in my opinion, dollar can surprise to the upside, and the euro USD also found resistance here in an ascending channel. Okay, regardless, the move lower in the euro has been very muted so far, right? And we are just about to test the first area of support. So I think there are better opportunities. I mean, if you want to be long the dollar, which I think can prove to be a good trade, I think there are other pairs you should prefer to do that against. Okay.
Thank you, Steve.
I know we have more questions, and I know I took quite a long time, talking about the markets, but whenever we have like such a price action, there are things to be said. And we're going to be on the chat room, of course, for our users. We're going to be sending updates, etc. So you know how to do that, how to have access to ForexAnalytix. Just subscribe. Besides that, we're going to be here tomorrow. I'm going to be more than happy to address any of your questions. Enjoy the interview, Dale. Thank you, mate.
Nice analysis, and congratulations on warning our community about this happening, and congratulations on not talking about it, but acting on it. Okay, Adam, how are you, buddy? We'll make you the presenter. What an excellent time to have Adam Button with us. Adam's one of the best in the business.
Hello, hello.
Hi, Adam. How are you, buddy?
Good, good. Can you hear me?
You're a little soft.
Oh, a little soft. Hold on, let me get the video going here too. What the heck?
Okay.
All right, there. Can you? Which screen? What are you seeing on my screen here? I don't know.
You and let's get started.
Let's get.
Go to webinar page.
Okay, it must be this one here.
And I want to know what your T-shirt says.
Yeah, well, my T-shirt says all-time low. Oh, sorry, all-time low. You had that one on. I had the all-time high one on before, and this one over here says, "This is don't panic."
Oh, buddy. So,
it's
yeah. So we went from in a week, Adam, from return on equity to return of equity, from cash is trash to cash is king.
Yeah.
Beginning of a new bear market, or just a little cleanse, and it'll reestablish itself, and we get another wave to the upside. What do you think?
I mean, the only piece of economic news yesterday was the ISM non-manufacturing index, and it was at the highest since 2005. This isn't the start of any kind of crisis or anything like that. But that said, the stock market's gone too far, too fast. But I think we'll get another washout here. It's going to be a very interesting open. The VIX is at 50 right now. The S&P 500 is going to fall another 50 points for sure. Some margin calls will be mixed in, and we'll see how ugly it gets. Tuesday's a pretty good day for a market bottom. There's a kind of similar episode to this back in August 2011, and you saw that run through the Monday, and then on the Tuesday you got a fresh low, and then it turned around on Tuesday. Maybe a classic turnaround Tuesday. Yeah. The VIX story is a really interesting story about how some of these ETFs have blown up.
Yeah, that's where I was going to go. VIX, which is the inverse VIX, and people have been picking up quarters off the sidewalk for a few years, selling volatility and being long VIX, and I believe there's some problems at Credit Suisse was one of the bank's names. So ECNs have proven they don't work. I mean, it went.
Yeah, sorry, it's XIV.
Yeah, go ahead.
Yeah, I mean, just to explain, if people don't know, it's XIV is the ETF. There's another one, SXVY, and they're going to wipe out about $3 billion in value here at the open. They closed yesterday, well, the XIV did at 99. I was down about 15%. It closed, it's going to go to zero here today. It's a Credit Suisse product for sure. There will be lawsuits. It's really unclear about how it all went down and why it lost so much money so quickly. But you know, hedge funds own it. Credit Suisse itself owned about $500 million of exposure to it. They say they're hedged. So shares of Credit Suisse were down like 7%, but they've mostly come back. So, you know, the story is, like you said, it was a great trade, though. I mean, for years, it went from about $10 to $144 through last week. And this is the old long-term capital management trade from 1998. They were betting against volatility then, and it's a great trade until days like this.
Like correlations are great until they stop working, till the music stops.
Yeah.
Yeah. So you know what's interesting is the muted response in FX, don't you think, with all this carnage? I mean, you know, comparatively, we've had a little bounce in the dollar. You know, nothing that impressive. Where, you know, I can remember times like this where there'd be big flows into the dollar. It doesn't seem to me that that's happening. Maybe it will happen, but so far it's been anemic, the bounce in the dollar.
Yeah.
What do you think?
What was it? I guess it means there is no big carry trade ongoing. If you think there would be some de-risking, and there's clearly a little bit in the dollar and the yen, although to a lesser extent the yen. But yeah, it's nowhere near the magnitude of what's happening in stocks, and even bonds, you know, picked up yesterday, but that's reversing a lot today. And I think all of that is really just adds to the confidence that it's a kind of a temporary event, really a kind of flash crash, and it'll be a distant memory in 2 or 3 years, as crazy as it seems now. Now, does it end today, tomorrow, the next day, next month? It's a little harder to say, but I think now that there's this focus on some of these ETFs blowing up, that kind of tends to focus the market's mind on what went wrong.
It makes people not want to play. It makes people not want to play, at least with those products. And there's been such a big move into ETFs, not as much so ECNs. They're, you know, much more complex, but you know, the S&P 500, I guess, is the largest owned ETF, and you know, it was fairly orderly, even though we had, you know, huge drops within minutes. And I think what's happening now, maybe you could shed some light on it. For a long time, people were talking about market structure, all right, and you know that we don't have open outcry, and it's all done by machines, and that could add fragility to the system if things were under pressure. So, you know, you're even seeing that, you know, with one candle in cable last night. Within a heartbeat, it dropped 50 pips. So perhaps we're really going to test market structure here over the next month or so.
Yeah, it is. It is. I mean, we saw in the flash crash a few years ago. It is broken to some extent. That you get these moves, and really you can't put a Y on it. I mean, but even that happened in '87. You know, that's way before my time. But part of it is the market psychology. Part of it is that volatility was so low, market was so complacent, there was so much leverage, and I think there's an inevitable reckoning anytime that happens in any market. I mean, crypto's another one.
Yeah, I want to get to that. Yeah, I want to get to crypto and ask you what you think. But you know what was kind of a market tell? We were talking about it during the blow-off phase of S&Ps when they kept going up. The VIX was going up with it, and that's, you know, it happens occasionally in their false signals. But I mean, the S&P and the Dow were rocketing, and the VIX was trading 11, 12 instead of under 10. It was kind of a market tell.
I think the bottom was the 26th of January, was that?
Yeah.
And an interesting point, I think the regulators are going to get hauled out on this, and I'll transition to Bitcoin. because it's important. There's ETFs, and I think there's leveraged ETFs and ETNs, and this happened in a leveraged, sort of a derivative-driven ETF, and I think BlackRock was out criticizing those, saying they shouldn't exist. I mean, why do investors need a triple levered anything when you have the one-off one, you have less degradation, less decay in those, and they're really, if you're marketing these to retail investors or making them available, they probably shouldn't exist. Now the SEC is bought off, so I don't know how it's going to shake out, but there might be some pressure to get rid of some of these leveraged ETFs, and you have a lot of money in the S&P 500 ones, the other ones, and if they, make some sort of announcement, it would be the kind of announcement or the push, to close a year or two from now, or 6 months at least. Yeah. But there would be a little bit of selling on that sort of thing.
The erosion, Adam, and I could speak with personal experience. I've owned an ECN that the decay was a TVIX. The decay on that, even if the VIX was moving sideways, just because of the cost and whatever their strategy is for buying options, it has as bad of an decay as an option does. It can decay 90%.
I mean, something like the SPY, which is the S&P 500 ETF, it works. There isn't really that. I mean, the fees are probably different.
Right. It's the ECNs. You're right. They should not be marketed because, I'm supposed to be, quote unquote, a sophisticated investor. I had no idea that there'd be that type of premium, that type of erosion if a market went sideways. So,
and just as I'm talking, I see the headlines crossing. Credit Suisse is shutting them all down, those velocity shares ones. So that was sort of expected, but they're going right to zero from $99. Is an awful day for
the
some
XIV
people.
is going to be at zero.
Yeah, well, I think they redeem it all, and if there's any money left over, I mean, I read through the prospectus last night when I was reading it, but it's
wow, yeah, okay.
It's a revocable call notice on the velocity shares. So they were showing it at $4 last night, but I mean, if you're from 99 to 4, 99 to 0, it's not.
Yeah, that's a financial accident. You want to go to Bitcoin, but before you do, I'm wondering what your thoughts are. Crypto turned down first. Okay, and some people were talking about crypto actually being kind of a market tell and leader to what could happen to the market. I see no correlation except maybe it's indicative of extreme speculation and parabolic moves. But so I'm thinking if there's a recovery in the market, perhaps crypto turns first. And I looked at a few charts. I hardly ever do. But the structure on something like Ethereum still looks corrective to me, and that it could be drawing to a close for, maybe a move to new highs in Ethereum. What do you think?
Yeah, I like it. I mean, Ethereum has a use. It's used on the blockchain to fund a lot of these ICOs, and they're continuing to come to market. I mean, there's like dozens of them a day. So there is going to be that real demand for Ethereum, but I think at the same time we're going to have this washout in different. There was a time when everything was rising, right? And right. Most, if not 90% of tokens are worthless. So
yeah, we talked about that. We talked about this last time, and compared it to anything with a .com after it, and then you brought up some lemonade company that put crypto at the end of it that went up 10 times in value.
Yeah, that was funny. That feels like ages ago. I mean, there's been so much since then. Kodak has a worthless token too, but they're still up, triple whatever it was. And the interesting part to tie back into the ECNs is, a few months ago we were so close to getting a crypto or a Bitcoin ETF, and I think regulators are going to look at that now, and the SEC is going to say, no way that's happening, not after this blow up in these leveraged ones. I think the regulatory pendulum is going to swing back, and that pretty much kills the hope of a Bitcoin ETF, which would have been a massive catalyst for crypto. So I think that's bearish. And I think, to speak to your point about, okay, what drove all this? I think that it does feed into Bitcoin, because in December, the animal spirits were unleashed. People saw the returns in crypto. crypto, 70 times last year in Ethereum, and said, why am I in markets trying to bang out a 6% return a year? Let's get a little bit greedy. And I think the leverage came in, and I think that's what we saw in January.
Oh yeah, there are stories, bro, about college students, millennials, borrowing on their credit cards to buy Bitcoin.
No, it definitely a bit, but I think that fed into equity markets as well. People just got a little bit greedier in equity markets, and it really did release the animal spirits. But just like that, seeing the crypto market fall was also a reminder that you can lose money as well, and I think that is kind of played into it as well. So it's just that whole mass psychology of the market was tinkered with in the Bitcoin boom and whatever it is we're at now. I don't like the look of it. I think in any washout you're going to get some bad actors, and we'll see what happens with Tether and Bitfinex. And that doesn't look very good to me, so I'm avoiding that space. And then then back in FX, I don't think it's going to filter through that much. I think that the focus is sort of off of crypto for now, unless there's something really dramatic coming.
So we've talked many times at the beginning of months, because your seasonal work is excellent. There have been some great calls based upon your seasonal. So here we are in February. Let's pretend that we haven't had a mini crash in the market. What were the seasonals saying coming into February?
Yeah. It's obviously anytime something like this happens, the seasonals are above the 5th or 10th thing you want to look at in the market. The positive ones were commodity currencies, especially Aussie dollar. It was a strong month for Aussie, a tad of a weak month for the yen. Oil, very, very good month for oil, and that continues for a couple months after this. And gold, it continues to be a winner through February, and then it starts to turn. So those were the big ones there. Now, all that said, I don't know. It's going to be very tough for any of those trades to finish higher on the month after what we've seen, although it is certainly possible. We're not down that far in any of those trades. So that's the seasonal look for February. Okay.
So basically, gold and Aussie both being commodity plays, and oil as well. So a lot of gold bugs were probably disappointed that after that type of drop, 5% in a day. And you're a market historian. I want to know if you know about this, but after that kind of drop in a day, that there weren't more safety flows of cash into the gold market. It was kind of like,
it goes to your point, it was really an equity-only market event. It didn't happen in bonds or FX to the same extent, so it's not that surprising. Then again, if you're a gold bull, you're still pretty happy yesterday and the day before to get zero return. But yeah, I'm a bit surprised gold's down today. I think it should turn up, and the big event to watch is February 15th, is the start of the holidays in China for the Lunar New Year. And that, there should be some buying ahead of that. But after that and during that, you really want to watch closely around those days, because that's when the turn in gold is most likely to come.
Okay, I was figuring 1310 might be a decent level.
If we get down there, there is still a nice tailwind. The chart looks okay. We got to get up about 1375 is a big level, and then it could breakdown.
If that happens, that would signal what in your count? I see 1500 if that happens.
Yeah, just saying 1600 could be a really nice bull run. And what I guess this dollar debasement would be the trade on that, which is totally realistic if stocks can get back on their feet, which I think is going to happen. But the advice for anyone out there is this: you don't need to be a hero today. A day like today is very, very dangerous out there. FX less so, but there's crazy moves happening.
When you're having events like instruments blowing up, there's nothing wrong with being a spectator. I was talking about that today, and I was a perfect example of not expecting perfection at the crap table. I covered my bearish positions, Russell, ETFs, and maybe I won't even trade ETFs anymore. This was a triple leveraged one. it did perform because it was bearish, but I got out when the S&P was 2,700. And when I made that call, 2,700 seemed like an extreme forecast a week ago. You know, so, you know, we have the seasonals here, buddy, and great advice about just being, you know, careful, and it's okay to, you know, just sit on your hands and await the next opportunity. Let the dust settle.
I trade small. There's never anything wrong with trading small. It's always.
I think we should always trade small.
Yeah. So.
You know, the opposite of my song, use less leverage, is use max leverage. Try and turn $100 into 10K. Swing for the fences, and your equity goes away.
Yeah. Another one. You got a new one every time. I've probably been on 50 times, and one I haven't heard. Another one I haven't heard.
So why don't you show the community what you guys do? Talk a little bit about what you do at Forex Live, because you're such a great information source, and you're excellent for covering news events. So I bet you were up a lot during the night covering Asia and everything, right?
Yeah, I was reading about that VIX story a lot, and you know, it's interesting. We analyze in real time everything, so technicals, but generally news analysis, 24/7. ForexLive.com. You know, we got all the tools there if you're looking for charts and that sort of thing. But mostly it's just a place to talk about what's happening in markets in real time and try to analyze and interpret news as it happens. So if you see a move in the market, a big spike in anything, you know, go to ForexLive.com, and we'll generally have it figured out for you. We're on top of every news source in the world, and figuring out what's happening with all the sources.
And you're now covering crypto, I see, Adam. It's new.
Yeah,
crypto
exactly.
There.
We're on top of whatever's happening there. You know, headlines were crossing last week about subpoenas for Bitfinex. We had that for really anyone else in the world on the web. So we try to be quick on the news there, and try to have some unbiased insight into that market. And also, I wanted to congratulate you guys. I see you up for that FX Street Award. You certainly got my vote, so good luck with that.
Oh, well, thank you very much for your vote, buddy.
To support you there.
The money's in the mail.
Get a new T-shirt.
And
I know I got all-time high, I got all-time low. I don't know another one I can.
And you don't know, I brag about you to the team that whenever you know, I need someone to step into the you know, the abyss of not having a guest, so many times you come through for us, and you did it again. So I want to thank you so much, my trading warrior brother. You know, safe trading to you and all your people. And
yeah, well, it's a harrowing day today. I know I'm pretty revved up for it here. The stock market's going to open in about 5 minutes, so I think it's a major event to watch to see how it shakes out here at the open. It's going to be really, really interesting.
Well, you know, in times like this is the advice I give to people like you. Be yourself, a pro.
All right. Well, that's great advice. Don't get greedy.
Which you are, buddy. Thank you so much, Adam.
Yeah, well,
great talking.
Well, good luck to everyone out there, and let's pick up some pips and make some money.
Okay, bro. Adam Button, everyone. You can follow him at FX_Button or at Forex Live. And that's it for us. See everyone in the chat room for all the action. If you're not a member, consider joining so that after FACE closes, you have great sounding boards like Blake Morrow in there, and Steve Volge and Stelios, and guys that are in there are serious traders. So that's how they feed their family and put a roof over their heads. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Adios.